Hi, this is Monday 23rd, and as usual, market is looking bearish. What you're seeing is the 4-hour chart on the CFD, which tracks more or less where the SPX is standing. It is, of course, based on the discounted value of the futures, but this is good enough. The market reopened last night, Sunday, lower to actually hit the 2175 area, which is the mid-range between now, which is a pivot level, previously the support, and now a stronger support on 1875. We can anticipate, because we have a conjunction of a few support levels here, including this FIB target. So we can assume that in the beginning the market will try and hold, even if it breaks or penetrates the 2200 a little, and which can be understandable because the lowest part of this support area is here on 2185. So as you can see in pre-market data, 2210, so the market is still trying to hold it, and it may still try and hold. But now I would say that even though pivot is not supposed to be as strong as a resistance or a support, I would say that this rejection that we saw on Friday of the 2500 level will probably calm buyers' appetite. So maybe another line forming with it's just a little extension of this channel. I'm not going to draw it here because it could be just a one-day event. And of course, it is quite likely that the market will eventually break that 2185 to aim lower. And this is not a coincidence that this strong support area equates to the second FIB expansion target. So I would say maybe some bearish congestion, and most likely the market will go down again. I think market participants will not forget that 2500 was rejected, so a bounce would be limited, and probably if it were to happen, maybe to the halfway range around 2345, 2350. So this is the 4-hour chart, which generally gives us a good picture for a couple of days, maybe up to midweek. If we look at the longer time frame, it's just going to be bearish, bearish, and more bearish. So the patterns are exactly the same. So we see the same support area on the 2200, basically 2185 to 2220, and we have now the strong resistance on the daily chart joining the 4-hour chart. So this stronger support may be the next target on the way down. Still very much oversold, and there's with no whipsaw, no bounce. So at least we can try and protect positions if you're market neutral, or you can go outright bearish. And if you need to maybe sell call trade spreads, maybe you can try above 2500 fairly safely, and definitely above above 2800. Now for today, I said on the 4-hour chart that we could see some bearish congestion here, and here the 2185 has not broken yet. So yes, that there could be some congestion, maybe a slight bounce, but I would be very surprised if the market bounces north of 2350. And if it does, I would probably assume that it will be a following wave of selling again. Let's take this level as still valid. So in the short term, bearish congestion is more likely, even though in the long term we're still looking at a fall to the channel lows that incidentally are pretty close to the levels I mentioned earlier, around 1900 to 1875. Okay, that's it for now. For members of the class, there will be a video on the current positions, and hopefully if the market is not halting, market makers will be at the desk pricing options and as early as 8 a.m. UK, although otherwise the trading plan will be sent out by email by the open. Thanks for watching, and bye for now.